विशाल सर, आपको शुरू करना है?
सर मुझे स्टार्ट करना है या शुभंकर जी कर रहे हैं?
दीपांकर जी नहीं कर रहे?
अच्छा, मुझे करना है।
यस।
ओके ओके।
यस।
जस्ट 1 मिनट सर। Okay, good evening, one and all. So
Good evening,
it's good
sir.
that students are present here well within time. So students, we have to first take up a few practicals from what we completed in the last class relating to customs, which includes valuation plus computation of duty. And after that, I just was checking the schedule and what I received from BOS. I got to know that 2, 3 chapters are still left out from our GST syllabus. So we will also cover those chapters first. And then as the time permits, we'll go to the statutory updates. That should be fine with all.
So actually the coverage for today has been statutory updates, right?
Originally, actually, that is what was discussed in the
What was on
previous class.
agenda? Okay.
But
Okay.
now I'm informed that 2 or 3 chapters are still pending for revision. So that is why we are taking up those chapters first, and after that we'll take updates.
Okay, fine, sir. Yes,
So
sir,
the
fine.
chapters
Okay.
are place of supply and e-commerce transactions, which are, I think, critical chapters.
Yes, yes.
So that is why we are taking that first. That
Okay,
should be
noted,
fine.
sir. Thank you.
That
Yes,
should
yes,
be fine.
noted. Thank you.
Right,
Yes,
right,
yes.
sir.
Perfect, perfect. Okay, so good evening, one and all. Let us start. Let me first take you to valuations. In the previous class, we did valuation chapter. Now, if you remember valuation provisions, I'm sure you all would have even revised it post our revision class. So let us now understand those with the help of 2, 3 examples. So I'm taking example number 4. So it is BSA and company imported a machine from UK. From the following particulars furnished, you have to arrive at the assessable value and duty payable. So both things are covered in this question. First, we'll do the valuation aspect. Remember one thing in valuation, majorly the practical questions that we get is valuation with respect to transaction value. And you should always remember to add the costs which are mentioned in Rule 10. That is for freight, that is for insurance, and the other charges if they are applicable, like for royalty, like for any other proceeds which the supplier will be getting from the importer in future, all these things. So with that in mind, we should understand all the details given in the question. Do minute reading about the facts, because even if you miss out on one single fact, the answer may change. So be very particular with the facts. So let me start with the details. So the basic price of the machine is given as £10,000. Air freight is given as £3,000. Engineering design charges, which is paid in UK, is 500. License fees relating to imported goods payable by the buyer as a condition is 20% of price. Material components supplied in UK free of cost, valued at 20,000. Insurance paid to insurer in India, and buying commission paid to buyer to his agent in UK. Now, besides all this, the further details are interbank exchange rate is 98. Now, this is the bank's exchange rate given. CBIC's exchange rate, which is notified for the purpose of our valuation, is different. So we know that out of this, which we have to always adopt, it is always the CBIC notified rate. Importer paid 5,000 rupees towards demurrage for delay in clearing the machine. Make suitable assumptions wherever required and show your working with explanation. So now with all these details, we need to work out what would be our customs duty payable. So I'll require inputs from you all now, since we have done very recently. So I'm sure you all would be still afresh with all the details. So help me with the provisions of section 14, which is the valuation section, read with rule 3, which is the value which is your transaction value of the imported goods, read with rule 10, which is the cost that have to be added. So these are the details. So price of the machine is 10,000 UK pounds. And then you are given all these details, the air freight, the engineering charges, license, material components, insurance, etc. Now, out of this, what all things I should include, what all things I should not, and what are the reasonings and justification? Yes. Who can help me?
Yes, sir.
Voice is low. Voice is
Yes.
low.
Yes, sir. We will help you.
Oh,
Everybody
great.
will help
Thank you. Please. Go ahead. Swaminathanji, please.
Yeah. Price of the machine, definitely we include it.
So, first part, what we are doing in valuation is we'll first find out the assessable value under section 14, correct?
Yes, sir.
So for this, we start with price of machine, which is, I think, 10,000 pounds, correct?
Yeah, 10,000 pound.
Yes.
Then engineering and design charges paid to a firm in UK. It is allowed, sir. See, engineering and design charges is part of that kind of things. It is allowed.
Other than in India, so it is allowed.
It is
Perfect. That
allowed.
is also important. So you should be very clear with the complete provision. So we'll include this. We'll add this. What else? What about license fees relating to imported goods?
Yes, sir, included 20%
Yeah,
of the price of machine.
20% as a part of the buyer condition of the sale. We have to include it. 20% means the 10,000 pound into 20%, it will come 2,000.
So that is also to be added.
Yes, sir.
Okay, perfect. What else? So I'll do one thing. I'll just so to this we add the 500, which is the design charges, right? This is as per rule 10 bracket 1. Second is the license fees.
License fees.
20%.
20%, yeah, 2,000.
Okay. What else? What about this material component supplied in UK by the buyer free of cost?
Sir, it is not a condition for sale, so I think this will not come.
Okay. Let us just, in case we are forgetting the rules, let me take you back to the rules. So whether it has to be a condition, that also you need to test. I'll just take you to rule 10. Yeah. So it says rule 10 cost to be added first, commission except buying commission, then engineering design work, as rightly mentioned, undertaken anywhere except India. Most important, this point, the numbering has been missed out, but this point, materials, tools, dyes, consumables used in production of the imported goods supplied free of charge or at reduced cost. Will this not cover this particular point?
Sir, we need to include it.
Yes, sir.
Correct, na? The condition of sale is relevant to royalty and license fees. So our previous edition, which was for license fees, for that, this was the point, what you were mentioning, that it should be a condition of sale. Similarly, for any other payments also, that requirement is there, but this requirement is not there for the remaining editions, correct?
Yes, sir.
Good, but it's good that at least you all have the pointers in mind. Thoda sa plus minus ho jata hai, that is okay. Fine. So coming back, yeah. So this is to be added, but this is in rupees. So I'll wait for adding this because I'll have to first convert this into rupees and then I will add. So for the time being, I'll keep this pending, but this is to be added. Next is insurance, that will come later. And next is buying commission, which is 100 UK pounds.
Yeah, if the buying
Is to be
commission paid in
excluded.
UK agent, we can include it. Buying commission paid in
That's right,
India,
it is
it is not includable.
Where is this specific condition coming from? that if it is paid in UK, includable, if it is paid in India, not includable. It simply says commission, which is includable, but then out of this, if it is buying commission, it is not includable. That's it.
Buying commission is excluded from the ambit itself.
Correct.
It's specifically mentioned that
it is irrespective of
any
where it
other
is
type
payable.
of commission is includable, but buying commission is not includable.
In fact, buying commission is a commission which would be payable outside India only. If you remember last session's discussion, somebody asked me also, sir, please explain again what is buying commission. At that time, I had given a very specific point. You see, there are two types of agents. One is whatever I'm buying, whatever quantity, whatever value I'm buying, for every import, I have to pay the agent a commission because that agent is arranging for the entire transaction. And generally, this commission is a percentage or it is per ton of quantity. So it is more like a variable commission that is includable because that is a normal commission which you always pay at the time of buying or selling. Here it is case of buying because we are importer. However, what is the second commission? You have appointed a person outside India. What is the role of this person outside India? He has to search in the entire market, in the foreign market, as to who is the proper supplier, who has proper quality goods, what matches your requirement, and that person, or you can also call that person as your agent, simply does what? He connects that supplier to you. You give him a fixed amount as commission because his role was only to give you the right supplier. His commission is not linked with the each import consignments. So it is not a variable commission that every time you import, every time you have to pay. It is a one-time commission because it is the commission which you are paying to this agent because the purpose is to help you locate the supplier. That commission is what is over here referred to as buying commission. If you want, I think there is some explanation in the detailing part also. I just don't remember which page number it would be. I think it should be somewhere here. Yeah. See, now we're here in the detailed provisions where you see this. I remember there was some explanation about buying commission also. Okay, it is, I'm not able to locate it here. So, but that is what is the difference between a regular commission and a buying commission. So buying commission is something which is specifically excluded, but then you have to.
Yes, sir. It is a rule number 10, 1A. There is there, sir.
No, sir, that is there.
Commission and yeah.
I'm saying there is a specific explanation to this term buying commission. There is a para which defines or explains what is buying commission, which will not be included. I was just looking for that para. Take anyway. So I hope you all understood the explanation which I gave you all. Right?
Yes, sir.
Now, so be very clear. Don't be misguided by this factor that whether the commission is payable to an agent in India or outside India. That is not the deciding factor. The deciding factor is that what is the nature of commission. If the commission is to be paid for every import, that is includable. If the commission is to be paid one time only to help you locate, have we missed something? To help you locate the customer, then it is buying commission, who is where the person is helping you to locate the right supplier. Now, in this particular case, they have specifically used the term buying commission. So even if it is payable outside India, that according to me is not the deciding factor. You have to exclude it because it is specifically mentioned that it is a buying commission. Correct?
Yes, sir.
Yes, sir.
So remember this. It's good that this point came up in this sum. So don't be misguided by this fact that whether we are paying it outside India or we are paying it in India. That is not the deciding factor. Correct? So we will include this or exclude. We will exclude. We'll write a note for this.
Sir, with respect to commission paid to local agent of exporters is allowed in the export case, sir?
Obviously. So now you are talking about export valuation?
Yes,
That
sir.
should be allowed.
Yeah.
Yes.
Actually, I confused with that.
No problem. So this value is in pounds, correct? Something like this is pounds. Now I have to convert this to rupees. For this, I have to apply the CBIC rate, correct? What is the CBIC rate given? It is
100
100
rupees.
rupees. So it is 1250 plus. I have to add one more thing, which was in rupees, material component supplied. Component supplied free of cost. Amount is what? 20,000 rupees. Now, what is this total called?
FOB price.
Perfect. So this is the free on board price. So it is 1270. Now, I have to add freight. I have to add insurance. Now, in this case, the transportation medium is what? It is air.
Air.
Do you remember anything about freight?
Yes, sir.
Yeah.
20% of FOB
Yeah.
will be when
20%. 20% of the FOB
Correct.
or
That is the maximum.
insurance value. Yeah, insurance value, whichever is high.
No, insurance, that point is applicable if you are not given the breakup of FOB. If it is FOB plus insurance, then you will take the total, and on that total, you will apply 20%. If it is FOB plus insurance given and the breakup is not given. But here, if insurance is separate, so we'll not include insurance. Without including insurance, we'll have to consider this, right?
Yes,
So,
sir. Yes, sir. For
20% of FOB and the actual freight is 3,000. 3,000 multiplied by 100 is 3 lakhs. Correct? So in the actual freight in rupees is 3 lakhs. Now, if we apply the 20% maximum limit, it will be 20% of this amount. How much will it be?
2,54,000.
2,54,000.
So whichever is lower, we have
Yes.
to restricted up to 20% of FOP. So how much it is coming? 2 lakh.
2,54,000.
And what is the insurance? 1 second.
6,000.
Rupees. So I'm getting my final CIF, which is also my assessable value, and it is now in rupees. Fortunately, it is a round figure. Again, in the exam, don't be misguided by this, because many times where we do not see a round figure, we slightly have a doubt whether this is correct or not, are we going right or not, but there is no such thing. Now
Sir,
up to
it's
this point,
15 lakhs 30,000, no? Including FOB value.
So we need to include FOB, right?
sorry. I missed that point. I only added the freight and insurance. So
Yeah,
260,
15 lakhs, 15
yeah,
lakhs 30,000.
1530, correct.
Yeah.
Now, on this, I have to calculate the basic custom duty. What is the rate?
It's not given, sir.
But they
GST
asked
and
to
all not
calculate
given.
the duty payable. Na? Acha, it is only assessable value for the purpose of duty payable. So there is no duty. So
Yeah.
fine. Perfect. So this is the final answer. Correct?
Yes,
Yes, sir.
Anybody, any doubts or questions in this?
No doubt, sir. Clarified.
Anything about the working, anything about the provisions?
So the freight calculation, I would want to clarify. It has been taken the lower of the two, right?
Actual freight and 20% of FOB. Correct.
Acha, the 3 lakh amount and the 1270 into 20%. That is okay.
Correct.
Fine.
Because
Thank you.
this is air freight. Huh? Had this been
Air.
ocean
The
freight.
mode of conveyance is air.
Correct. Had
And
this
another
been
thing to
ocean
be
freight,
noted.
had this been ocean freight,
Acha,
what you would have done?
Yeah, fully allowed.
that,
Fully we need to consider all the value.
that provision will not be considered here if it is ocean freight.
Then you will take entire 300,000, that is 3 lakhs.
Yes,
In
that
that
entire
case, you
thing
take
will
the
be
actual freight. Correct.
actual will be taken. But then, sir, there is another point to be noted in this, right? Matlab, the mode of conveyance is air. And another point that you highlighted was
Buying
there something?
commission.
No. In relation to freight, freight and insurance combined, what was it that you
So
spoke
that is the
of?
point. See, I'll show you. Maybe many times
Please.
what will happen in the question, they will not give you the FOB value. They will give you FOB plus insurance. Means you do not know only FOB value. So where only FOB value is not known, the value known is FOB plus insurance. In that case, you have to calculate the 20% on FOB plus insurance.
Fine. That will be inclusive amount in case it is given. So that is FOB plus insurance, inclusive amount. So on that, 20% will be accordingly calculated.
Yes,
Fine.
where you are not given that separate. See, here it is given. So customs FOB plus insurance. This if custom FOB not ascertainable, but custom FOB plus insurance means the total is given. Independently, only FOB is not given.
Okay, fine, understood.
See, these are some very off the beat pointers. They may not be required in our regular provisions, but yes, for those odd sums, whenever they come in the exams, you should be knowing this point.
You have to keep this in mind. Yes, okay, fine.
So otherwise, you don't have to fall prey to these things because they are not the ones which are required regularly, right? So let us take some other lengthy sum. Okay, let us take 7th sum, because in 7th we'll understand how to calculate the duty, what would be the sequence of different things. Fine. Okay. So Jagat Corporation imported some goods from the US. The details of transactions are as follows. Authority rate of exchange. Okay. So they've given you two authorities exchange rates, CBIC's rate and RBI's rate. Which one will you take?
CBIC.
Yes, CBIC rate.
Either the rate
CBI's
given
rate
by
is
CBIC
relevant.
or where CBIC says take RBI rate, then you take RBI rate. Right? Understand this. You see, what will happen? In 90% cases, CBIC gives the rate. But at times where CBIC is not itself giving the rate, it will say that, okay, you take this person's rate. So you will take that person's rate.
Sir, is there a chance that it will be, mentioned? I mean, it is always
there is no
in all the
chance
cases.
that will be mentioned. It is not a chance. So if they want that, see, in that case, what will happen? CBIC rate will not be given. Na? In this same example, if CBIC itself has not notified a rate, the rate will not be given. And then somewhere they will say that CBIC has notified to apply RBI rate. In that case, what they will do, they will give you RBI rate, they will give you stock exchange rate, they will give you interbank rate. And then in the adjustment, they will say कि CBIC has notified to take RBI rate.
Okay, specifically instructed.
Always. See, if CBIC has given rate, there is nothing to be given in the question. It is by default CBIC rate always. Again,
Default, you have to go by CBIC. Okay.
Yes. Again, I'm giving you the offbeat provision also, that there is one more carve out to this
I wasn't
provision.
aware of this because all along I have been learning that CBIC has to be taken. But then
Yes, that
if
is
at
the
all
main
it is
provision.
meant,
That is the main
principle is
provision,
followed.
but there is a carve out. See, understand this. CBIC, which is our board, is involved into so many things related to indirect tax. Now, there is a possibility that for a particular period, CBIC is not in a position to calculate the rates. Because see, they also have to do the calculation. Now, these rates are not so easily available. In the whole day, there is a fluctuation in the rates, right? So majority times they give the rate. But at times, let us say there is something going on in the ministry or something where CBIC is not in a position to compute the rate itself, then it says only for that short period, you take this person's rate.
Okay.
This is one of the,
Okay.
again, that's why I'm saying it is an offbeat provision, not maybe
Offbeat,
it will never be given in the exams, but you should know, because tomorrow if you are
Yes,
practicing,
you should be aware of in the
yes,
practical scenario. Okay.
and then you never know, it may also be part of question, because ultimately finals is entire law.
Yes.
Correct?
Yes. Yes, this is a valuable input, sir. Thank you.
My pleasure, buddy. So now you have the CIF value. So good thing is they're directly given the CIF, so no need to find out. Chalo, I'll do one thing. Let me modify this question to again give you a new pointer. I just modify this question that here in the sum, they have not given CIF. This $1,50,000 is FOB. The entire sum remains same. Only I make one change, because then again, I'll highlight one more point, because many times you may have read it, but when it comes to you practically, it retains. So let me modify this question. Instead of CIF, let us say the question says it is FOB. Then how will you solve? So I'll just start working. And again, I'll require your inputs, your help. And Swaminathan has promised that, yes, sir, we will help. So help required. So I've just modified the question.
20%.
Sir,
FOB 150. So this is now FOB, right? Not CIF. And the entire sum remains same.
Then freight is 20% and insurance 1.125%.
1.125.
Perfect. This is the point I wanted to bring out from you. Excellent. So what is the point? In case the freight is not known, like in this example, in the entire question, freight is not known. Not known means not given. Similarly, in case insurance is not known, again in the question, it means not given. The point is, assessable value will always be CIF. It cannot be FOB. And for that purpose, in order to get CIF, the provision has given this particular specific point. Then you have to take the deemed value for freight and deemed value for insurance. Very good. I hope everybody else understood this.
Yes, sir. We need to include that insurance as well as that freight cost.
Perfect.
At a 20%, insurance is 1.125%.
Great. So how much is 20% of this 30,000? How much is 1.125% of FOB?
1,687.5.
You have something in fraction?
Yes, sir.
I don't think you should have in fraction. You're sure? There should not be fraction according to me. Let me also calculate, because see, it is 150. You already have 4 zeros. Now 4 decimals are already there.
1 minute, sir.
Okay, but it is percentage. Yes,
It is
possible.
1687.5.
Possible.
Yes,
Because
sir.
it is in
1687.5, sir.
no, you may be right, because actually it is a percentage. No, I forgot that it is percentage. Yes.
Yes, that is the value, sir.
That is why it is having in decimal. So 1687.5. Yes.
0.5.
Yes.
Sir, altogether total only 81,687.
Okay, you have done great. I was just doing it on my mobile
Yeah,
phone.
1 lakh.
Good.
Yeah, 1,81,687.5.
Now this is in dollars.
Into 70 rupees. 70 rupees.
70. Okay. So again, CIF, which is also now your assessable value, which is in rupees. So
Sir, it is 127,18125.
12718.
18125.
So it is 1,27,18,125. Correct?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. Now we calculate the basic custom duty. So the rates are basic is 10%, social
10%.
welfare surcharge is 10, IGST 10, and you have to ignore compensation. IGST is 18, sorry. Okay. Now this 10% is of what?
CIF, assessable value, sir.
10%.
Accessible value.
Accessible value.
So 1271813 rounded. So I make one more addition with your permission. Is it okay if I do some more modification in the question just so that we can include maximum things?
Yes, sir. You can include.
So let us say if this question also says that there is this what is that special duty we studied? Safeguard duty.
Safeguard duty, anti-dumping duty.
So let us say the question says that there is safeguard duty. Safeguard duty is 20% of FOB. Now, my point is we have to calculate social welfare surcharge. We have to calculate the IGST, where in this sequence safeguard duty should be added. And most important point, whether safeguard duty would be included while counting the social welfare cess, whether safeguard duty would be included while counting IGST. That is what I want to make out.
No, sir. Safeguard duty is not included.
Sir, yeah, sir, social welfare surcharge always included on the BCD alone, not on others. Only the basic custom duty alone we can charge the social welfare surcharge. And IGST for all the tax we have to include it.
So even safeguard?
Tax, including safeguard we need to include it.
But I think somebody said safeguard will not be included, if I've understood it correctly.
No, sir. Safeguard is taken on directly FOB and it is taken
FOB.
separately in this. But while calculating IGST, we have to include it.
Okay. So should I calculate it here?
Yes, you can calculate it. Safeguard duty.
At the rate of 20% of FOB. See, this is not in the sum. I'm just making an addition just to give you all the flavor, right?
Yes, sir. Yes, sir.
But what about when IGST is calculated, safeguard will also be considered?
That is the point I want to bring out. That is why I have purposely
that
added
is
this.
Yes, that is why that is why I'm asking again.
Don't ask. What is my rule in the class? We are studying a law subject, right?
Understand it.
No, you don't understand. Now understanding is done, right? The issue is you are not able to recall.
Okay, because the thing is I missed the explanation session. So that's the reason. I mean the previous class of yours. But even otherwise.
See, you have the module?
Yes.
Open. Search.
See,
I can give you answer upfront. I don't have a problem. In fact, by doing this, I'm investing more time. But my purpose is I want you all to understand the provisions and see when you do it yourself, when you read it yourself, the retention is higher. Correct?
Yes.
Just open your module. Search for safeguard. Sorry, not safeguard. Your question is relating to IGST. So search for the customs tariff act. So you have to go to the chapter of types of duties. If I'm not wrong, it is chapter 3 of our module, customs module. And in that, go to IGST, which is in 3.7, and how to value it is given in 3.8. So you will get the answer. Also, I'll just give you a hint. You will also get the hint of this from the GST law also, because in GST law also in valuation something is given, and that is also applicable here. So both will help you get the answer. You can refer anything.
Okay, fine.
So do one thing, open chapter 3 and find it out in the types of duties chapter itself. By the time I'm solving, till the time I reach there, maybe you can find out. Yes, Swaminathan, help me.
Okay.
Sir.
So I have to calculate 20% of FOB. FOB is 150.
Safeguard duty.
I have said it is 20% of FOB. So help me with the workings.
Multiply the 70 into 20.
Into 20%, right? Yeah.
30,000.
1,50,000 into 70 rupees. Into
That's
20%. It will come 21 lakhs, sir.
So I have to also multiply it by the conversion rate, which is 70, correct?
7, it coming 21 lakhs.
Yes, sir.
Perfect.
And also we need to put the SSS. So
Social welfare surcharge.
social welfare surcharge.
I think 10%.
Sir, social welfare surcharge always on the BCD value.
Only.
Only we have to. This is you have instructed so many times while you are giving the teaching. That's what I never forgot in my life.
Oh, Bapre, it is not a matter to remember for the life. But good. See, that is why we hammer, so that mainly for exams that should be embedded. Correct?
Also, IGST also I never forgot. IGST for all the duty, it is includable.
Good. So this is my total for computing IGST. So what is the total? You have to add all these figures.
Yes, sir.
I'm not using my phone for calculation because it is very cumbersome using the mobile calculator. So if you all are having the calculator, please help me.
1,62,17,119.
162
17.
119.
Yes, sir.
Okay. Now this is as per rule 3 bracket 8 of not rule, sorry, section 3 bracket 8 of the Customs Tariff Act. So Customs Tariff Act specifically says that when you're computing the IGST portion along with the customs duty, you have to include all duties, which also include even these special or additional duties in the form of safeguard, anti-dumping, etc. To give you another reference or analogy to this,
All other protective duties will be included. I mean, safeguard, CVD, anti-dumping. Okay.
but there is one more reason. As I said, there is a reference in GST law also. In GST, we have
Okay.
section 15, correct?
Yes, valuation.
Valuation. Section 15, subsection 2, clause A. So 15.2 says following have to be included if not already included in the value, correct?
Hmm.
And in that A says all taxes other than GST. So when it says all taxes, it means all. So even basic, see, we are
So
including basic, we are including safeguard, we are including social welfare. So all taxes other than GST has to be included. Correct?
This interconnectivity of provisions is good, sir. Yes, fine.
So that is why, see, any other subject or law, until and unless specifically given, cannot override the other law. In fact, GST is the main law, and customs is just asking us to pay that GST along with customs. So custom technically should not override what is given in GST, because in
So
that
it is
particular case, so it has to match with the GST. So that is why
basic law is GST, and this is just like, I mean, it is
single window
working on those
system,
principles.
single window system, just giving the facility of collecting GST here. So that is why this section 38 of the Customs Tariff Act has to align with section 15 of the GST law, correct? So now
I
on this,
found a new perspective, learning perspective to this, sir. I mean, with respect to this point also, connecting with section 15. Thank you, sir.
whether you come to profession, what we have learned in our professional career now, I'll be nearing 25 years in 1 or 2 years. So what I have learned in these past 23 years, that not only your taxation laws, when you are actually in practice and especially in advisory part, you have to connect with other general laws also, like the Contract Act, like the Sale of Goods Act, like the Transfer of Properties Act, Companies Act. Because when you are a professional advising, even though your advice is relating to one subject like GST, but parallelly you have to refer to all, we call it as the allied laws. So allied laws are the other laws which may not be taxation laws, but they have to be applied. So do this, and that is why now our new syllabus has this paper which is your
IBS. Yes, paper 6, IBS, multidisciplinary case study.
That is the purpose. That is the purpose. That you should be able to link, because that is how real profession is. Fine.
Yes.
So help me with this 18% of this amount.
29,19,081.
Yes, sir.
29,19,081.
Yes, sir.
081. Correct, sir.
And so this is the total landed cost. Landed cost means the cost at which the importer is clearing the goods, which includes the basic cost also, and plus all the taxes, duties also. Correct?
Yes, sir. Correct.
So I hope with this question, you all would have understood how.
And one more point with respect to all other laws.
Yes, please tell me.
Sir, one of my Senate auditor used to tell me that once you become the auditor, enter the position, once you clear the CA, you are presumed that under the sun, whatever the law, whatever the rules is applicable, you should know about it.
True. Very true, Beda. That is the point.
You have to be an all-rounder, right? I mean, we are venturing out in so many subjects, all in the journey of learning also. So while practically implementing also, we have to have that knowledge.
And that is what I was saying. Ki now, since you said that you got this new perspective, I just want you to expand your horizon. That it is not that you'll only link to taxation laws. Just keep in mind you have to link all provisions. Like even when you're doing something in GST, try to connect it with company law provisions wherever applicable. Try to connect it with your accounting standards, because that also plays a role. Because see, ultimately GST is a transaction tax, and a transaction is always recorded as per the company law and the relevant accounting standards. So you have to even apply that whenever you are looking at a particular transaction or matter. Fine.
Yes.
So we'll take one more sum. Now this is a super comprehensive sum because it covers many things in valuation also, plus it also covers the computation of duties. So in this one question, we'll try to now merge everything to the extent possible. And anyways, I have the veto power of always amending the question if required. So where I want to add anything more, I will also not hesitate to do that.
Yes,
so let
sir.
us take up
adding the interesting part to it. Yes, sir.
Fine. So let us go to this. Compute the total custom duty and the IGST under the customs law on imported machines. So now you have to also compute the duty. What are the details? Cost of machine at the factory. Now, if you'll remember, I had explained that there are different types of prices, right? FOB, CIF. One more price was there. What was that price? Even before FOB. So the last price is CIF, which is at your port, Indian port. Then at the foreign port, the previous price is FOB. And even before that, it is the X factory price.
Factory price should be the one.
So this is what is seen in this question. They have given you the X factory price. Price at the factory gate of the supplier, correct? Exporter in this case.
Yes, sir. Only at the factory gate of the manufacturer. That the X factory price. Yeah.
So, but that is not relevant to us. We require two prices. One is FOB, and then we finally require CIF. So now we have to travel the whole journey from X factory price to FOB, and then from FOB to CIF, which is your assessable value. Okay. So, fine. Already it is given that these values are in US dollar. So now further details, transport charges from factory of exporter to the port. This will be included, not included?
Yeah, we need to include, sir.
Okay. Handling charges for loading the machine in the ship.
Yeah, ship is allowed. Yes, sir.
Freight charges from exporting country to India.
Exporting country to India is allowed up to the port.
Yes, so it is up to the port only. Only we have to check whether it is air freight, anything given, whether air or sea. No.
Not specifically given.
So if it is saying port, like here they are saying in freight incurred from port, etc. So it means it is sea freight only. And if it is sea freight, then there is no limit of
ship
20%.
demerit charges, it is given one adjustment.
So it means it is seaport only. So it is your ocean freight. And since it is ocean freight, there is no limit of 20%. Correct? So full 5,000 is includable.
Yes, sir.
Now next is buying commission paid by the importer.
No. Buying commission never included, sir.
Super. Now it is clear. Now further costs are given in Indian rupees. Literage charges paid by the importer at port of importation.
Yeah, at the port is allowed. Literary charges.
You're sure?
Yes, sir. We
Yes, sir.
discussed. Yeah, we discussed in the earlier class. It is allowed, sir.
Chalo, ठीक है, we'll see. Freight charges incurred from port of entry to inland container depot.
Inland container depot. No. It's not allowed. It's internal. There's a freight incurred from the port of entry to inland container depot. It's not allowed, sir. This is outside the port.
Okay. Okay. Any other views? For the first two, 12,000 and 60,000, literage charges and transport from port to inland container depot.
Sir, anything from the port to the customer location, any freight is not allowed. We will not include in the accessible value.
What about ship demurrage charges?
Demurrage charges is allowed. We need to include it.
I don't think so. Let's see the provisions. Chalo. See, it is no problem to go back to the provisions. I also do that. I never say that I will always be in a position to recall everything. So if I don't recall, I'll go back. Because there is a specific condition attached to that ship demurrage, right? So if you are saying it is includable, it has to be taken with a pinch of salt. What is that pinch of salt? Let us see. So, see, it is here. So cost of transport of imported goods will include ship demurrage charges. It will include, but what is given on ship demurrage is included, but with a pinch of salt. What is that pinch of salt?
Chartered vessel.
Chartered vessels.
What is that?
Chartered vessels means is separately hired, sir.
Means, see, one is there is a huge vessel in which your goods are coming as one of the consignment. So there are multiple containers loaded in that ship, maybe 1,000 of them. Out of that, one is your container. That is one transport where you are paying charges for only your one container's transport. Second is your quantity of import is so huge that you have hired the entire ship. You have booked the entire ship. That is what is chartering. So this word is also used for aeroplanes. So
Chartered aeroplane, yeah.
So where you are only taking one single ticket in the plane, that is your one single passenger
Exclusive.
transport. And where you are chartering the plane, like all these celebrities, many times even your BCCI for traveling of the players and the staff, they charter the whole plane. Means who? Nobody else is there. Only my people are there in the plane. So that is what is chartering, where you book the entire plane. Similarly, where you have hired the entire vessel, it is only for your goods. It is only for your people. That is what is chartering. So demurrage charges will be included only when the entire ship you are going to hire and not where only your goods are coming by the ship. So in this case, at least as per the facts, nowhere it is said that the entire ship is being chartered by you. So that on that basis, if we answer, so if that basis we answer, this will not be included. Correct?
Sir, if the chartered means is a entire ship is hired by one person, means
Correct.
is a chartered.
Correct.
But in case one of the container is chartered, means is not, we will say is a chartered. It's a common.
Correct. It is only then transportation of that one container. Correct? And that is why it is not includable, na? Because Demurrage charges is paid for the entire ship for delay. So see, demurrage is what? Where you are delaying in leaving the port and doing all the compliances at the port. So it means you are utilizing the port area for a longer period of time than allowed by the port. So as a punishment penalty, they charge you extra charges, which is called a ship demurrage. The name itself says it is for the ship, correct? So it should not be included in one assignment of yours. That is why it is not includable. But where you have chartered the entire ship, so that applies to your entire consignment, then that is includable. That is what is the difference.
Yeah, in this case, we can put note. We assume that it's a chartered trip.
Yeah, so that can be done. That can always be done. That's why I said key. That is what you have to mention in the note, and on the basis of assumption, it will be done. Right?
Right, sir.
Export 800. It is 10th or 9th. 9. So you have the machine cost of machine. Yeah. Let us say X factory price. $20,000. Transport charges from factory. Transport.
$800.
Then you have handling.
$50.
Freight. Anyways, we do not require FOB separately. Na? Or I'll do one thing, I'll add freight later. Let us first find out FOB.
Sir, this question that insurance is not given, we need to compute the insurance.
So that is why we'll need FOB, na?
Yes, sir. Yes, sir.
Okay.
Since transportation.
If I'm not wrong, I think I read somewhere only freight is given, insurance not given. Okay.
Yeah, freight is specifically given, insurance is not given.
$20,850. Converted this into rupees. So 20,850. Where is this voice coming? Somebody's phone is ringing, I think so. So we have to take. Now, interestingly, now the best part of this question is one more issue is there. You are given two dates. One is the date of bill of entry. One is the date of entry inwards. Now, first, I want to decide the exchange rate. Now, exchange rate is of CBIC, that is done. But it is given of two dates. Which dates exchange rate should be taken?
Bill of entry CBIC rates, sir, 70 rupees.
No, but CBIC, both rates are CBIC, na? 70 is also CBIC, 75 is also CBIC.
But, sir, bill of entry is CBIC rate is that, no? 70.
So that is what I'm asking. So you'll take bill of entry's date rate, or you'll take the date of entry inwards date rate?
Sir, bill of entry is rates.
Only bill of entry, or no, something whichever is later, whichever is earlier? No such provision?
Sir, only on the date of bill of entry only, sir, we will consider always.
I remember something reading like this, whichever is earlier, whichever is later. Nahin?
Sir, it's rate of BCD. We have to take letter entry inward date, whichever is later.
Okay. Good. So you all are very bang on. This is what, again, we have been discussing in previous class, and I have been emphasizing this in both the classes, the previous and previous to previous, that you have section 15, which deals with the relevant date for deciding the rate of duty and tariff value. Where it is given, you have to take whichever is later, entry inwards or bill of entry. But within section 14 itself, that is the valuation section, for determining the rate of exchange, it is given that you will always take only one. that is the bill of entry. You will not see whichever is earlier or later. Correct?
Yes, sir.
So the point is, you all are perfect, bang on. We have to take 70 rupees as the exchange rate for our purpose. Okay, tell me how much the amount comes to?
14,59,500.
Yes, sir.
Three.
14,59,500.
Literage and all I have to add?
Yes, sir. We need to add literature. We just saw before that chartered some.
No, I mean to say, obviously we have to add. My point is whether it is to be added to determine FOB, whether it is to
Yes,
be
sir.
included.
Yes, sir.
Yes, sir. We need to include, sir. It is imported at the port of importation, right? The charges is paid. We need to include it.
Okay. And the other two charges, transport from port to ICD,
No, sir.
not
No, sir.
applicable.
Not applicable.
Ship demurrage, we have two possibilities. Since the question is silent, you can take the assumption and either include or not include depending upon what you are assuming, whether it is chartered vessel or not, right? So now what will be the total FOB?
Sir,
Sir,
freight charge.
sir,
It will be
freight
after
charges
this.
up to India.
So that is what is added after FOB, na?
Yes, after FOB, correct.
And we need to determine FOB because you pointed out na, ki insurance is missing. So for insurance, we need to take 1.125% on FOB. So for that, we have to first find out FOB.
No,
Wait, I will
sir.
add later.
Sir, FOB is very clear, sir. X factory plus transportation, handling, then that handling charges, transport costs up to 4. That is called FOB, correct? On that FOB only we will include the insurance cost.
So that is what I'm asking. So that is why I asked whether literage will be first added or not.
No. We will not add on the FOB on the letters charges.
Correct. That is what I was mentioning earlier also, because these are all part of charges which you incur here. So this itself is your FOB.
Correct. That's all. FOB is 1459,500.
Yes, sir.
Yes, this is what I was asking at that time also, right? So now I will include freight, and in freight I will include this literage because literage, bar charges, all these are part of cost of transport. Correct?
Yes, sir.
Freight has to be taken on actual basis because here there is no problem of air freight, so no need of any limit. So how much is my freight?
Yeah, freight is $5,000
5,000 into 70.
Into
into
70.
70.
Which is 12. 5,000 into 70 plus 12,000, correct? For literage.
Yeah, literature, 12,000.
How much it comes to?
3 lakh.
5 are 35.
Yeah, 3,62,000.
362,
360.
correct? Now insurance will be taken
1.25% on FOB. Yeah, 14 lakhs 59,500. 14 into 1.125. So it's coming 16,419.
so less. Acha, ठीक है.
It's 1.25%, right?
Only
16,000.
419.
I'll make it 420 for rounded off purposes. Okay.
Okay.
So this is 18, 36, 37. Right?
Sir, demurrage charge, whether we need to include, sir?
So demurrage, it depends upon our assumption. I am assuming it is not a chartered vessel, so I'm not including. You can include with that assumption. So it is
Okay.
subjective, na?
Yeah, we can put note on it. Yeah.
Ah.
Right, sir.
So this becomes my assessable value, which is my CF.
Yes, sir.
Now I have to find BCD. Now here again, out of both the dates, which date will be considered for this BCD working?
BCD,
25th March, sir, 10% BCD.
25th March will be taken 10%.
So BCD is 10%.
sir, but CF is nothing but any cost involved up to the port. Right, sir? FOB is nothing but only we will include the transportation from foreign country to Indian port. Only we will include that transportation,
Transportation plus
handling, insurance, handling charges.
Yes.
Only those item only will cover on the.
Right.
Yeah. If the freight insurance is not given, then we need to calculate and audit. Right, sir.
Right. Perfect.
Perfect, sir. Now, after solving these three questions, it's very clear now.
Good. What about social welfare surcharge?
So always 10%.
Yes.
Always 10% on the BCD value.
That it may not be given in the sum, like here also it is not given. So, but we have to be proactive enough to consider it. Right?
Yes, sir. 18.3. Okay. Then we have to put GST, right? IGST.
So what is the total of all these three values?
Lakhs 40,092.
20
lakhs 40,092.
92, correct.
And our rate is
12%.
12%.
18.
I put 18.
That is my habit also.
It comes to 3,67,217.
367.
216.56.
So fine, we can round it off.
Yes.
Indirect taxes are rounded off to nearest rupee and direct taxes are to nearest 10 rupees.
Yes.
So,
Sir, it's 2,44,811, sir. I think she calculated on 18%. I think she called, 18%. I think.
No, if she would have done on 18, it would have been much, much higher. It cannot be only in few thousands.
Sir, 12% means if you put on the 20 lakhs, 10%, it will come only 2,44,000.
Correct.
Yes, sir, 2,44,811.
That's what I'm saying. 244,811.
Correct.
Sir, I said wrongly, sir.
Not
I
a
have
problem.
only taken 18%, sir.
Not a problem, beta.
Okay, sir. Sorry, sir.
That is fine. So
Sir,
give me now the
rounded-
final landed cost.
Sir, this rounded off is in each point we have to round it off, or at the last we have
You
to
can round it off to each point. Reason is these are taxes under separate acts, like GST is under the GST Act. Over there, you have the separate rounding off provision. Customs law has a separate rounding off provision. So you can round off each of them because anyways, you are rounding off to nearest rupee 1. And also these are taxes under different laws and each law has its own separate rounding off provisions.
Okay, sir. Thank you.
So give me total. 22 80
22,84,903.
03. Perfect.
Yes, sir.
Thank you, sir.
Any other than the sum which we can take up? This one, right?
Yes, sir.
Or
We
should
can.
we also, let us just discuss this one also. 16 also appears to be good.
Yes, sir. Import
So what it
transfer.
says, product Z was imported by Mr. X by air. Okay, again, so it is by air, so you have to be careful with the freight. Details of import transaction are as follows. Price of Z at X factory. So this is again X factory price. Freight from factory, this is includable fully. Is there a 20% limit here?
Yes, sir.
20%
No, no,
limit
no.
applies?
No, no, no. 20% limit not apply there, sir. Yeah, from that port, airport to the country airport, we need to include fully. See,
Correct.
only from foreign country to our country, that transportation only, the 20% limit is there.
Perfect. So for this transport, which is within the country of exporter, there is no 20% limit. It is only for the country of export to India. Only that freight is having that 20% limitation. Fine.
Yes, sir.
Loading handling will be included full. Now, freight from load airport to the airport of importation. This is our air freight.
Yes, sir.
This we have the 20% limit, which is
Yes,
20% of FOB.
Yes, yes,
Insurance,
sir.
FOB.
no limit, entire 2000 can be taken.
Yeah,
Chalo,
since it is specifically given.
do one thing. I'll give you all 5 minutes. Chalo, why should I solve? Why should faculty have all the fun? Why not students should have the fun, right? Chalo.
Yes, sir.
Nothing much is given because only this much is relevant.
Sir, accessible value comes to 8,61,000.
Okay, so let us check since you all have solved. So price, X factory price 8,500. You can just cross check immediately. Plus freight 250, plus loading unloading 250. So this becomes $9,000, right?
That is called FOB.
FOB. And for that, exchange rate that we will take will be exchange rate only of the date of bill of entry. What is my bill of entry date in this case?
20th
Bill
August.
of entry, sir.
Where they have mentioned? Yes, 22nd August is my bill of entry.
22nd August is bill of entry, and
Sorry.
The
20th
bill of
August.
entry date is 20th August.
Sorry. 22nd is the entry inwards date and 20th August is the bill of entry date.
for the exchange rate purpose, we need to consider on the date of bill
20th
of entry,
August.
20th August. For
So exchange rate
considering
will be 70.
70.
So 9,000 into 70, 6,30,000. Correct?
6,30,000.
Is FOB. Now find out 20% of this, which is the maximum limit, and compare it with the air freight. Or 1 second, air freight is also in dollars. So we can just make a direct calculation. So our 9,000 into 20, 9 2s are 18.
1,800.
$1,800 is the freight.
So $1,800 is 20%. So maximum what we'll consider is $1,800 converted. So we can do one thing. We can first do up to CIF. We can do in dollars only because all values are in dollar. So 9,000 was my FOB. Freight is up to maximum 20% of FOB. So it will come $1,800. Insurance entire 2,000 will be added. No limit. So this total, which is now
$12,800.
$800 is my CIF. Now converting it into rupees, which will be my CIF and AV in rupees.
70.
8,96,000.
8,96,000.
Perfect.
8,96,000.
896. Now on that, what will be my basic custom duty rate?
It will be
Sir,
10%.
10%.
See,
10%.
aircraft arrival date or bill of entry, whichever is later.
Correct.
See, in this case, the later is 22nd August.
So 10%.
Yes, sir.
So 10% of your CIF. Correct?
Yes, sir.
This is your basic custom duty. Again, social welfare surcharge, you will do it by yourself. That is 10% of basic. And the total of all these three, AV plus basic plus social welfare. This total is for your integrated tax.
Sir, IGST also we will consider that way only, sir, right, sir?
Yeah, because the rate of duty will be because the GST will also be applicable as per customs only, na? So whatever relevant date is for custom duty, the same applies for GST.
Okay,
This
sir.
is as per Section 5(1) proviso of the IGST Act. So IGST Act specifically says this.
Right, sir.
Done. So give me my final answer. Landed cost. Yes, landed cost. Students, landed cost.
It should be 11 lakh 13,907.
Sir, it should be 11,13,907.
All are getting same answer.
No, sir. Freight
No,
is
we are varying.
actually 20% is restricted to this, but we have already taken this 250 and 250. We have to reduce it.
We have to.
Reduce it from 1800 because
Why?
freight is restricted to 20%. No, sir.
But which freight? Which freight? Is it all the freight or is it only the freight related to foreign port to Indian port?
It's foreign to Indian food from factory
Correct.
to India.
So if that is the case, then why will we adjust that 250, 250?
Because it is freight, no freight
But
from
all freight is not having the restriction, na beta? See, you have to be very specific with the law. Is it that all freight is having the restriction? Yes.
I
Check
think
and
in
tell.
air it is restricted to 20% of all freight.
Read Rule 10, Sub Rule 2. It is there, na? Check. Let me know. Go back to the provisions wherever you have confusion, doubt. See, it is here. You can even go to the detailed rule.
Sir, in case of a air, there is some restriction is there, I believe.
Let's read. Let's read. That is what I'm saying. See, the best approach is always to go back to the bare act and the rules. So here I'm going to the rules. See, here I have the interpretative notes to the rules, right? Now here you will get more clarity. Explanation has been added to tend to clarifying that the cost of transport of imported goods includes ship demurrage on chartered vessels. etc. This explanations take care of cases of import by time chartered vessels or bulk carrier discharging goods on high sea, needing additional expenditure for delivery of goods at the place of importation. Place of importation observed by Supreme Court in this. Therefore, in cases where ship demurrage charges are paid by importer for detention of ship in the harbor before touching the landmass at the docks, these charges would be includable. Similarly, in cases where big mother vessels cannot enter the harbor for any reason and goods are brought to the docks by smaller vessels, bars, etc., the cost incurred for importation for bringing goods, literate charge, bar charge will also be included. Okay. Explanation has been added to Rule 12. I don't want Rule 12, I want 10. Freight. The second and fourth proviso to Rule 10 impart more clarity in computation of transport and insurance, where actual of each individual element are not known, but the cumulative is known. Fine. Costs related to transshipment of goods from port ICD, port to CFS, airport to within India shall be excluded. Fine. So in interpretative notes, I could not find that. Let me now go back to the main rule, if I can find it there. See, this is what I was searching at that time. I said, there is one explanation given for buying commission. So it is given in the notes. It says that the term buying commission means fees paid by an importer to his agent for service of representing him abroad in the purchase of goods being valued. So that is where this particular term is to be used, which is not includable in your total value. Okay. Let me go to the detailed rules to see what she's saying. Let us find out from the rules. So here now I have see here, in case of goods imported by air where the cost referred to in clause A is ascertainable, such cost shall not exceed 20% of the FOB. In case of goods imported by sea or air and transshipped to another, okay, this is not relevant. Now, in relation to A, for the purpose of subsection 1 of 14 and these rules, the value of imported goods shall be the value of goods. Cost of transportation, loading, unloading, handling, associated with delivery of imported goods to the place of importation. Now, what it means? It is saying associated with delivery of imported goods to the place of importation. Now, the question is when it is saying associated with delivery to the place of importation. So, whether it includes all costs incurred even in foreign country or whether it includes only the cost which is incurred from foreign port to Indian port. That is what is now our point of concern.
Yes, sir. It is not talking about the insurance for other costs like transportation and freight handling. All these things should not exceed more than 20% of the FOB.
But what freights, like what the other person just mentioned? She said that this 20% limit covers all freights.
Yeah, all freight, including loading and unloading charges, loading, unloading, whatever the cost.
Even done in the foreign country. This is what she's saying.
Yes.
Yes, sir. From 1800, this 500 will be subtracted because this is already taken.
So that is what we are now trying to figure out, right?
Yes, sir. Even that the transportation cost and the freight charges 5,000 also, and 250 also, it is not allowed.
So that is what is our point of discussion. That
yes.
We go back to the question. See, that is where the practical questions are very important. They take you to more depth of these provisions.
I think for vessels it's a separate procedure, and air we need to be careful on this.
Which question was it? I think this question.
16.
Yeah, 16. This 250 freight from factory of the exporter to load airport. This 250 also is a 20% restriction is
So
there.
in short, for all these three, combined the limit of 20% applies, correct?
Yes.
5,000 on 5,000, it should be.
But then in that case,
Yes, sir. Yes, sir.
our FOB will be 8,500 then. I think we have answers for this. 1 second. Let me just check.
There will be answer portion.
We have answers if I'm not wrong. Yes.
5,000 is taken into account.
Correct.
Yeah, for this 5,000 also.
But the starting point X factory, 8,500.
But then how come they got 20% as 1,800? Because they are saying 20% is of FOB. So for FOB, they have included this too, correct?
Yes, sir. FOB they included to that 500.
Okay, I have my reservations to this, but let us stick to what is given in the module then. So let us follow the module, though I have my reservations on this point. See, either according to me, then 8,500 should be then the FOB, which is actually incorrect. You have to add 250 in this. And once if you include this in FOB, then my understanding is 20% should cover only the later part of transport. That is my understanding, but fine. Let us do one thing. In case of doubt, I always prefer going by what module follows. So we'll stick to this. So I'll request everyone to make a note of this point, that wherever you are given freight, loading, unloading charges of foreign country, what we are doing over here is we are considering that also while determining the maximum limit of 20%. So 20%, whatever amount comes, you will consider all these costs in that while determining the comparison with 20%.
All these costs will be considered. Okay.
So, sir, in this case also, I have one doubt. Then please. How come they arrived 9,000 as a FOB value?
So that is what I'm saying. Now, so see, because for 9,000 they have added this, which is correct. Because 8,500 is not FOB, 8,500 is X factory. So you have to add all charges up to your port, then only it will become FOB. So this is correct. You have to add this 250, then 9,000 is the FOB. I agree to that point. Only I have my reservations of this 20% point. Okay, we'll do one thing. Let us not have difference. We should always go by what is followed in the module, so that it is relevant for our exams. So we'll keep this in mind for the purpose of exams, right?
Yes, sir. First, we can take 8,500 and this freight also, loading also included. This will become 9,000. Then 20% of it is 1,800. And then we reduce this 500.
Correct. So that we can do that way. So we will first find out FOB, that is 8,500 plus 250, 9,000 is FOB. And then when we calculate 20% of FOB, which is coming as 1,800, we will not add 1,800, we will add only 1,300, because we have already included this 250 while computing FOB. This is what you are saying, correct? Correct, na?
So I have done.
Sir, let me clarify my doubt. This rule is not applicable for vessel. The shipment.
Correct. So see, this problem will not come in vessel, na? So in vessel, what you will do?
Only, yes.
So vessel, you will add all the actual freight only. So this issue will not come in vessel. This is only with air freight.
Whenever the air is coming, we need to be very more careful on this.
Yes. And please make a note of this specific point, which we got to know from this example solution, that whenever outside country freight or extra charges or relating transport are given, that is to be considered as part of the 20% limit.
So we will stick to this solution.
Yeah, please. For all exam purposes, you should stick to that.
And also the determination of the custom duty, basic custom duty, we need to see the aircraft arrival date and filing
So that
date,
is, but there is no challenge in that. Na? That anyways we take whichever is later for determining the custom duty rate. That I don't think will be a challenge. I think the only new takeaway from this is how to apply the 20% limit.
Sir, my question is that on the vessel, when we are importing from the shipment, that in ship, that deciding the basic custom duty is applicable, the date of arrival of the ship or the bill of entry, whichever is later. In that case, also shall we decide the same way like what we are doing in the airport?
See, in case of sea freight, what will happen? You will simply add that 250, and let us say this entire 4,500, assuming this 4,500 is sea freight, correct?
Yes, sir. No, not that. My that doubt is cleared, sir. My question is on deciding that the basic custom duty. In the air case, we are deciding the arrival of the aircraft or the bill of entry, whichever is later. Only that date
The
only
same
we are.
rule is for air and sea both. Now, why? What is the difference in air and sea in relation to this, beta?
Okay. I'm thinking is for vessel is some other rules.
See, section 15, which determine the relevant date, it is same. It is irrespective of method of transport.
Okay, sir. Fine, sir.
Perfect. So
Perfect,
that
sir.
will not
Thank you.
change the answer.
Yeah. Okay.
Great. So this is a new realization for every one of us. Kindly make a note of this for the purpose of our exams, right?
Yes, sir. Thank you, sir. Yeah. Thanks, team.
Chalo. Should we take up one more example, or now you'll be able to handle it yourself? Should I now go to the next topic?
Yeah, we will handle one more question, sir. We will discuss and we will move on, sir. If anything difficulties.
Anything new is there, we will just check.
Yeah. We will see any new identification.
Chalo, 19 will take up because I can find many different type of things over there. Should we take up 19?
This is rules as per rules, does it?
Yes.
19
Because others, what I'm finding is now repetition. Or let us do one thing now.
standard,
Why not
yes.
let us orally take up everything? Why to leave? So we'll start from 17. So we'll just
Yes.
quickly go through. We may not just solve it and find the answer, but at least we can discuss, right?
Yes,
So
sir. Yes, sir.
from Cochin import goods from an exporter in US, the vessel carrying the goods reaches Mumbai port first. And from there, goods are transshipped to Cochin. Okay, so this is the new point over here. So the ship has first reached Mumbai port. So on its way from US, the first major port in India where it is calling is Mumbai. And then, since my goods are to be imported at Cochin port, after calling at Mumbai port, now the ship is moving towards the Cochin port. Fine. With this data, let us determine the assessable value. So cost of machine will be considered, which is $20,000. Transport charges from factory of exporter, 1,000 will be considered. Handling charges, 100 will be considered. Buying commission will not be considered. Freight charges from exporting country to India, 2,000. Achha, firstly, it is air freight or ship freight is ship, na? No problem.
Yes,
So
sir.
that headache is gone. So entire
Actual.
2,000 will be considered. Sorry, beta?
Actually, we will consider $2,000.
Entire
Yeah.
2,000. So 100 will not be considered. All other things up to 2,000 are considered.
Yes,
Actually,
sir.
insurance is not ascertainable. So that you will have to take 1.125% of FOB, correct?
FOB value.
We will decide what is FOB. Let us first consider the other points. Charges for design and engineering work undertaken for the machine in US.
Yeah, that is included.
Added.
It is
To
in
be
US
added.
country, foreign country.
Correct? Loading, unloading charges paid at the place of importation, 1,500.
Loading and loading. Sir, this is included, sir, at the place of importation.
Included, sir.
So I will add this.
Yes, sir.
Yes, sir.
Transport charges from Mumbai to Cochin port.
No, sir. This is transship.
No, sorry. This is a transshipment.
That is why I'm asking. Because it is a transshipment, is it includable?
No.
No, sir.
No,
Go
sir.
back to rules. Let us go back to rules. because now this is a case of transshipment. Correct? Acha, firstly, can anybody help me with transshipment? What is transshipment? Can anybody help me with that?
Transshipment is say from original port.
What is transshipment?
Sir, transshipment means suppose if the imported at Chennai, means Chennai is a main port. If it is coming through Mumbai to Chennai or Goa, go for say example in the Mumbai to Goa is a transshipment. That the distance between Mumbai to Goa.
Correct. So whether then that is, see, you are clearing your goods at Goa, correct?
Yes, sir.
So whether you'll include the transport charges from Mumbai to Goa or not.
Logically,
Logically, what it means, it should be.
should be included.
Sir, transshipment should be when the goods are come to a port and before filing the bill of entry, the goods are transferred from the port to a warehouse.
No,
Where-
but a warehouse, it is not transshipment. Warehouse is not transshipment. What example Swaminathan gave? See, my port is Cochin in this example, or let us say Swaminathan's example is Goa. Correct? I am at Goa. The importer is at Goa. I am going to clear my goods at Goa port. Correct?
Very
But the ship is so routed, then when it is first entering India, it is coming at the Bombay port, which is a major port. Correct? After unloading the goods at Bombay, it now moves further to Goa port, where it go unload the goods, where my goods are also unloaded, and then maybe it may move further either to some other Indian port or directly it will leave India. Possible?
possible. Yes, sir.
Now in this case, the movement of ship carrying my goods, it landed first or it called at Mumbai port, but since my goods were destined for Goa port, it further came to Goa, it unloaded my goods and it left. So this a portion of the transit or transport from Mumbai port to Goa port is what is called as transshipment.
Okay, sir.
So now my question is whether this transportation cost should be included.
Sir, it should be included because the final destination is Kochi port, not the Mumbai port. We imported the good to our to Kochi, not Mumbai.
Correct. That is what is the point. See, this is what I think is also discussed here also in their explanation. So an explanation has been added clarifying the cost of transport of imported goods include ship demurrage charges on chartered vessels, literage charges, bar charges. This explanation is added to take care of import by chartered vessels or bulk carriers discharging goods on high sea, needing additional expenditure for delivering of the goods at the place of importation, which is the requirement of 10(2)(a). The place of importation as observed by Supreme Court in Garden Silk Mills case means the place where imported goods reach the landmass in the customs area or the import or land custom station, or if they are consumed before reaching the landmass, the place of consumption. Therefore, in case where ship demurrage charges are paid by the importer for detention of the ship in the harbor before touching the landmass at the docks or at the place of consumption, these charges would be includable. Similarly, in cases where big mother vessels cannot enter the harbor for any reason and goods are brought to docks by the smaller vessels like barge, small boats, etc., the cost incurred by the importer for bringing the goods to the landmass or
Sir,
place of consumption.
sir, it is excluded, sir. See, if you look at 4.83 page number and the bullet, key point regarding transportation cost.
No,
There is one.
1 second. I'm coming to that. That is also mentioned here. 1 second. I'm coming to that. Now, there is a circular. So, sorry, first I was. Therefore, in cases where ship demurrage, etc., similarly in cases where big mother vessels, so all this is given. All this will be included. Fine. Now, definition of place of importation. The term place of importation has been used in the custom valuation rules. However, the term not defined. To bring in clarity, the place of importation has been defined as means the custom station where the goods are brought for being cleared for home consumption. In view of the above definition, transaction value of imported goods in terms of 14 would include the cost incurred up to the place of importation as defined above. Now, this is what is the point I am highlighting. So, when you read up to this point, what understanding we get? My place of importation is Cochin. So, all expenses till Cochin should be included. This is the interpretation which we are getting up to this point. But what happens further? See, now the second and the fourth proviso to Rule 10.2 imparts more clarity in computation of transport and insurance where actual of each individual element are not known. Fine. Then treatment of transshipment. So here they have given about transshipment. But what is the problem is they are saying by virtue of 6 proviso to 10.2 costs related to transshipment from port to ICD, port to port, port to CFS, airport to airport within India will be excluded. So up to this point, when we read as per the definition and all, the interpretation which we get, or what is again, if you say logic, you should include the cost up to Cochin. But when we read the specific provisos interpretation, they are saying that because of the specific proviso, whatever cost you have incurred within India will be excluded.
Yes, sir. It's a benefit of the client. It's a good actually. Not
Sir,
included, it's good only.
See, we should never read law like this. See, when we are professionals, we should read the law how the law wants it to be read. Neither whether it is benefit to government or neither whether it is benefit to the taxpayer. We cannot take sides. We have to be neutral as a professional, right?
Yes, sir.
So this is how
It has to be interpreted in the way it is. I mean,
obviously, na, otherwise your
yes.
advice may go wrong.
So
as per the
yes, yes.
specific proviso, it has been so clarified by the specific proviso that it will be excluded, correct?
Yes, sir. As for the specific proviso, it is excluded.
Perfect. So we can then get the answer accordingly. So it was 17. So we have to, where was that point? Insurance charges for designing, unloading at the place of importation. 25,000 will be excluded, right?
Yes, sir. We need to exclude it.
Yes, sir.
Perfect. All agreed. Also, there is no
Agreed,
dispute
sir.
on exchange rate and all because there is a single exchange rate given. So that will be done. So this new point, which we get from this point, this question will be helpful. That is about
Yes,
the
sir.
transshipment charges. As per
Transshipment
the specific
charges.
proviso, it has to be excluded, right?
Yes, sir. Any expenses on the transshipment not to be included.
Perfect. Chalo, let us go to the next sum, 18 sum.
Yes, sir.
ABC Industries Mumbai imported one machine through vessel Japan. Following particulars provided cost up to the port of exportation. Okay, that is my FOB. Correct, na? Up to the port of exportation. Loading charges 25,000. Freight charges from port of export to India 1 lakh. Anyway, since it is ocean freight, that should not be a problem. So 6 lakhs plus 25 plus 1 lakh. No problem, correct?
Yes, sir.
Yes, sir.
Now, following amounts are given in rupees. So, wherever includable, we'll have to first convert the above amount to rupees because all further expenses are in rupees. First, designing charges necessary for the machine paid to consultant firm in New Delhi.
No, it's not allowed.
It will not
Because,
be taken.
Not
yeah,
allowed.
if it
Because
is
it is in
incurred in
India.
the foreign country, then it is allowed.
Perfect. Next, commission paid but not buying commission to local agent of the exporter.
Local agent of exporter is allowed.
Correct? Included.
Yes, sir. Only buying commission is not allowed. This is allowed. We need to include it.
ठीक है. Next. Actual landing charges paid at the place of importation.
Included, sir.
Included.
Actual insurance paid at the place of importation are not sustainable. That is 1.125% of that. Correct?
1.125%.
Again,
Light
literage
risk-
charges paid at the place of importation includable.
Includable.
Correct?
Other things are easy only, sir.
Now you know the things, na, because we have already solved many sums. So now it is easy.
Yes, sir. Yes, sir. Thanks, sir.
Chalo, let us take one more sum, which will be a very good sum, I think so. So X imported certain goods from a related person. Wow. So now we have related person. So first rule is related person transaction value rejected. This is the first rule, correct? However, it has an exception saying that wherever importer can demonstrate, that is prove, that the relationship has not influenced the price. And how you can prove this? Where you can say that, see, the other person who is importing his or my price is more or less same. Second thing, what the importer can do is he can also prove that had you not considered my transaction value, you would have gone to valuation rules where you would have taken identical value, similar value, deductive value, computed value. My value of import is very close to all these values which you take in the valuation. So if you can prove one of these things, your value, that is a importer's value, even though the supplier is related, will be accepted. Correct, na?
Yes, sir. Also, I remember that the related person means the control 5% for the
Correct. So that
customer.
is the definition, but here I think definition is not required because they have already said they are related, right? When you have to determine relationship, then you'll apply those 5% control and all those things, right?
Yes, sir. For GST, it's 25%. You discussed on the day.
Correct.
I am
Very
remembering
good.
now.
Very good. So X imported certain goods from a related person, Mr. Q of US, and transaction value has been rejected. Fine. So the officer rejected. Rule 4.5. So what is 4? Identical. Rule 5 is similar. Are found inapplicable.
goods.
Very good. So they are also not applicable, identical and similar, as no similar identical goods are imported. Very good. Now, if both fail, then what option you have? You have the computed method or the deductive method. Sequence wise, deductive comes first and computed comes later. However, rule 6, which is before both these rules, say that officer, with the permission of officer, you can change the application of these rules. Correct, na? Students, you
Yes,
remember
sir.
all this, na?
Yes, sir.
So rule 6 says the next two rule sequence can be reversed. So you can take computed first if you want, right? Now, Mr. X furnishes cost-related data of import and requests custom authorities to determine the value as per Rule 8. So that is what they have done. They have asked to reverse the sequence. So now they are asking you to do by the computed. And what is computed method? What did I tell you about computed method? What is computed method, students?
We have to add all the cost.
No, I gave you some word. It is cost sheet method. Simple. When once you know this, finding out the value will be easy. You have to simply follow cost sheet, right?
Yes, sir.
So raw material cost plus fabrication plus other chargeable expenses. So see, this is material, labor, and direct expense, correct? Then this is overheads, right?
Yes, sir.
Then now from here, all the expenses as required in Rule 10 starts. Freight from the factory to the US port. This will be included. Loading charges as at US port will be included. Now this net profit margin is 20% of FOB. Oh God, how can it be FOB? I don't understand how can they take profit margin of FOB, but fine. If they have asked us to do that, we'll have to add all this up to 100 so that we get FOB. And then on this total, you'll add 20%, correct?
Yes, sir.
I hope you all are getting what I'm saying.
Yes, sir.
Pakka na?
Yes, sir.
So all these added up to 100 will make it FOB, that is free on board. That is all expenses up to the exporter's port. And the total
Yes.
of that is FOB. Add 20% for your profit margin, because in cost sheet we have to add profit margin to find out the sale price. So this will be the final sale price and it will be the FOB price. Then you add the air freight, which is maximum 20%. So whatever FOB you get at this point here, you have to compare it. You have to take 20% of that and compare it, right?
Yes, sir.
So 1500 compared with that FOB. But again, the same point will come. That 20% you'll have to again reduce this, na, freight and loading charges, as per our previous questions inside, because that
Yes, sir.
20% will include these two costs also. So
First we will
1500, 250, 100. First in costing, you will include everything for costing
Yeah.
purpose, right?
Yes, for
Final
FOE purpose. Yeah.
estimate, you'll have to
Then
Correct.
So, yeah, we will eliminate it then.
And then insurance on actual 50%. This total will be your CIF multiplied by 70%. That will be your assessable value by the computed method. Now, the custom authorities are of the opinion that since the value as per Rule 7, which is the deductive method, can be determined at 4 lakh, there is no need to apply Rule 8. Can the request of Mr. X be legally acceptable? If so, compute the assessable value. So we have computed assessable value. And can your request be legally acceptable? Answer is yes, because Rule 6 is specifically saying that you can always ask the authorities to reverse the application of the rules. That instead of taking the deductive value first, you can ask them to take the computed value first. Correct? Is this clear to all students?
Yes, sir.
Yes, sir.
Perfect.
Yes.
Great.
Yes,
We
sir.
had a very good detailed discussion, and with all these examples, all major parts of the rule is covered. Correct?
Yes, sir. Very happy, sir.
Great. So let us take our break now. It is 7:54 as per my watch. So we reassemble sharp at 8:10, and we go to the revision of some GST chapters which are left out. Fine.
Okay, sir.
Fine, sir.
Fine, thank you.
So two major chapters which are very relevant for exams. One is place of supply, one is
Place
electronic.
of supply.
We'll do this. We'll try to complete both these today, right?
Okay.
Fine. So let us break. So students, now we go to our topic, the two small topics. One is slightly big. Okay, so this is relating to the e-commerce transactions and their GST applicability. So firstly, what is e-commerce? So e-commerce is all the platforms that we are nowadays seeing. Now see, I'm not talking about e-commerce operator. That is the next thing. First is what is e-commerce? So wherever your business is running through some technology network, which uses obviously internet, and where using different apps, different websites, and through the network, you are supplying your goods services, or you are connecting to the prospective customers, prospective suppliers. That whole thing is called as e-commerce. So one, through e-commerce, you are able to connect the prospective buyer suppliers, like in case of all these websites where they give you the options of different suppliers and you can place your order through there. Or second is where the supplier has its own website and it is doing business through its own website. Then you have the different payment application websites. Nowadays, even banks have started their own website, so you can do many of the banking transactions through the website. Everything is what comes under electronic commerce. It is not electronic commerce operator, it is a different concept. So electronic commerce includes all these things. Now, second thing which comes or which is relevant in the GST law is electronic commerce operator, which we also called as ECO, for which we find specific reference in section 9.5. Now, e-commerce was a very large domain. E-commerce operator is a very restrictive part out of the total e-commerce. Now, what is this restrictive part? So e-commerce operator is that website, if I have to use the word website or any app, which is only providing a platform through which buyer and seller can get connected. So like Amazon platform, or for that matter, Flipkart platform, or for that matter, the Meesho platform, or for that matter, Make My Trip platform, where it is not the supplier. It is only acting as the intermediate gap bridging platform. So where I need to find out who is the supplier of a hotel because I want to go and stay somewhere, or I want to search for a good restaurant, and that is where I go to the website or I go to this online portals, and from there I book a hotel, I book anything, any goods or service. I am booking using this platform. That platform is,
Same goes with taxi aggregators. I mean,
yeah. So all these are Ola, Uber, all these are
Ola, Uber.
electronic commerce operator. What is very important is if I am the supplier myself and I have my website and I am supplying my own good service through my website, that is not electronic commerce operator. So electronic commerce operator is always a person different from the supplier. So it is, let us say, a third person. So first person is supplier, second person is recipient, and then you have the third person who is this platform through whom the supplier and recipient gets connected. Fine.
Fine.
Now, what are some important provisions relating to this e-commerce? Firstly, the operator and also all the e-commerce transactions. So let us go one by one. So first is what they have said, electronic commerce, taxability and registration where supplier supplies goods or services through ECO. So supplier is supplying the goods or services through ECO. So what are the provisions? First is where it is supply of goods. Now the ECO through whom you are supplying these goods. So the best example is Flipkart, Amazon, all these are for supply of goods. The ECO is required to obtain a compulsory registration, and whatever transactions are happening through this platform, through this ECO, the ECO also has to collect TCS. So whatever the supplier is supplying using my platform, let us say I'm a supplier registered on the this Flipkart platform. So when you place an order on me through the Flipkart, the payment is also routed through Flipkart. So the Flipkart collects the payment on my behalf and then hands over to me. But while handing over the payment, the Flipkart, which is the e-commerce operator, has to collect my TCS under Section 52 at the rate of 0.5% CGST, 0.5% SGST. Then supplier supplying goods through ECO. Now, what is the responsibility of the supplier? So first we saw the responsibility of the platform, that is the Flipkart platform. Now we see the supplier's responsibility, that is my responsibility. Required to obtain compulsory registration except where aggregate turnover of intrastate supplies with enrollment number in preceding financial year does not exceed the threshold. So if I am supplying my goods through electronic commerce operator platform, that is, I am one of the suppliers registered on Flipkart, and I am not supplying outside my state. So I'm from Maharashtra, I'm using Flipkart platform to supply within Maharashtra only. Then I get the benefit of the threshold limit for registration, which is 40 lakhs in Maharashtra, where I'm only supplier of goods. If I'm supplier of goods service both, then my registration limit is 20 lakhs. However, where I'm supplying outside Maharashtra, in that case, I will have to compulsorily take registration irrespective of the registration limit. This is very similar to what you study in registration provisions also. So whether I sell directly outside Maharashtra or through ECU I sell outside Maharashtra, registration is compulsory irrespective of the limit. Then whatever tax the ECO has collected from me, I will be able to take the credit of this TCS collected by the electronic commerce operator. Now, importantly, whatever is my TCS collected by the electronic commerce operator, that will come in my cash ledger. So you all know that every business has two ledgers, cash and credit. So this comes in my cash ledger, and then I can use it for payment of my any tax liability. Next, where we are talking about supply of services. Now here the things are going to be interesting. Now within services, you have to go and see the charging section, section 9 bracket 5, where for some notified services only, not all services, some notified services, the ECO has to take registration and discharge the tax liability itself in the first place. So what is important is, for some notified services which are supplied through ECO, the supplier has to do nothing, because these notified services are covered in 9.5, and 9.5 puts the responsibility of making payment of tax on the ECO as if the ECO is the supplier. So in short, ECO has to play the role of supplier and has to do all the things which a supplier would have done. Now, these notified services, if you remember, are what? Passenger transport. So Ola, Uber is covered. Then you have these housekeeping services where you had this portal or app called as the Urban Clap. Then you have the hotel services where the hotel is an unregistered hotel. So like you have all these Make My Trip, Agoda, etc. So all these websites are what are covered in 9.5, and there the website itself has to pay the tax. The exception is where these suppliers are themselves registered, like the hotel is registered or the housekeeping service provider is registered, then the housekeeping service provider and the hotel will pay tax. Otherwise, 9.5 puts the responsibility on the ECO. So what it says, now what is this A, B, C, D, E? Where is this A, B, C, D, E given? Where is this A, B, C, D, E given? Anybody knows?
For main pages, main.
Achha, main pages. Okay. Okay, so in case of A, D, and E services, achha, so the A, D, and E are the specified services. the ECO is liable to pay tax. So I've already mentioned what are the specified services. ECO is liable to pay tax. The supplier is entitled to the threshold limit of 20 lakhs, 10 lakhs. Next, in case of services other than ABE, that is not for notified services, that is B and C, ECO is liable to pay tax on such services only where the person supplying the service is not liable for registration. So I give you example like hotel. So for those services which are covered in the notified list but not in A, D, and E, the ECO is again liable to pay tax, but with a rider that the supplier should not be registered. If supplier is registered, then the ECO is not required. So within notified services, two categories, ADE, it is always the ECO who is liable to pay tax. In case of B and C, it is a conditional rule. If supplier is registered, supplier will pay tax. If not, then ECO is liable to pay tax. In both cases, for supplier, the threshold limit of exemption is what is the normal threshold limit. Then the second part comes is supply of services other than notified. So in this case, this part is very similar to supply of goods, where now the ECO is only playing the role of the platform. So here ECO is not playing the role of supplier for not certified, non-notified services. So here what ECO has to do, again ECO has to obtain compulsory registration. Again ECO has to collect TCS at the rate of 0.5C, 0.5S, so total 1%. And ECO may collect TCS if the supplier is unregistered. So in that case also ECO will collect the TCS. And the next point is the supplier who is supplying these services through ECO will be eligible for the threshold limit of 20 lakhs, 10 lakhs. So they can register after they cross the limit. And whatever is the tax collected by ECO, the supplier will get the credit of this tax in its cash ledger, which the supplier can now utilize for paying its tax liability. So these are the provisions relating to the ECO part. Some typo error is there because it is saying 0.25 C and S.
Yes, sir. Amendment is there in this section.
Okay. So this is correct.
Yes, sir. Yes, sir. This one is correct.
Okay, perfect. Now for TCS, what is the provisions of TCS? Who is the person who is liable for doing the TCS, that is tax collection at source? It is the ECO. Is there any threshold limit for exemption for registration? Answer is no. That is, it has to compulsory register. What is the value on which TCS is to be computed? It is the net value of the supply made through the ECO. Now, what is net value? So let us say I am the supplier registered on the Flipkart platform. Now, during the month, Flipkart has booked multiple orders for me, which I have supplied. But at the same time, there are many rejections. So we know in the online platform, there are many returns also. So that is where you have to take the net. So
net value.
So what is the logically also, what is the confirmed sales? Only on that you will be paying the tax. So even the ECO will be collecting the TCS only on the net value, correct? Then whatever tax is collected by ECO, by when it has to be deposited, it has to be deposited by the 10th day of the next month after the end of the month in which you have collected TCS. So this is somewhat similar to your income tax, TDS, TCS provisions. Next, what is this net value? It is the aggregate value of the supplies minus the returned supplies. That's it. So these are some basic provisions relating to e-commerce operations and e-commerce operator. Now, let us go to this very important, very interesting topic. One of my very favorite chapters. It is place of supply. Please understand, students. Now, this place of supply, what we are going to study, is exclusively from the IGST Act. So it has no reference in the CNS. There is nothing given in the CNS relating to place of supply. Now, what is this place of supply? We have always been reading about GST law, that GST is a destination-based consumption tax, correct? We all have read this. But let me tell you or bring to light this very interesting point, which I'm sure you all would also be knowing, that nowhere in the entire GST Act rules notification circular, which we call as the law. So nowhere in the entire GST law, you find this word destination. You find this word consumption. So when we say GST is a destination-based consumption tax, this is nowhere written in the law. Interesting. The law nowhere writes this. Law nowhere uses this term. But we always say that GST is a destination-based consumption tax because whatever GST we are paying, that GST is given to the destination state. This is where GST becomes a destination-based consumption tax. Now, the interesting point is, what is this destination state? This destination state, in the language of the GST law, is the place of supply state. So as I said, the law does not use the word destination or consumption. Then what is the terminology, parallel terminology the law has used? The parallel terminology the law has used is place of supply. So this is
In
what is.
IGST provisions, right? Place of supply. That is referred to as.
So IGST has actually given you a list of the provisions of what will be place of supply in different transactions. But before that, I'm first giving you the essence of this chapter. Why this chapter is relevant? Because when we talk about destination, what is destination? In the GST laws language, it is the place of supply. But then the question comes, why did the GST law did not use the word destination? They could have very well said place of destination, or they could have very well said destination of supply. Why they did not use this word in the GST law? Why they chose to use the word place of supply instead of destination of supply or place of destination? They could have used any proper
It is
grammatical.
maybe because the supply gets affected at that time, at that particular point in time. I mean, they could have even used place of destination, but place of supply. Okay, but then it gets affected. It gets completed. So maybe that's the reason.
Okay. See, the reason is to avoid any future disputes and challenges. What is this future dispute and challenges? Let us understand.
Litigations may arise. Okay.
So the point basically is, if I have to say so, the point is that if I would have used the word destination, then I would have been required to take always the actual destination only. If I would have decided, or I would have used the word destination in the GST law, I would be required to always take the actual destination. But when we read these provisions, you'll find that the place of supply in majority cases is the actual destination, but in some cases, it is not the actual destination. It means the place of supply is a deeming provision.
Deeming fiction is created. Okay.
So,
But then, sir, as you said, this may give rise to litigations, is it? I mean, if it would have been place of destination instead of this, in what way it would have given rise to
this is
litigations?
what I'm explaining now. Because had they used the word destination, then they would be compulsorily required to take the actual destination as place of supply. They would be required to take the actual destination as the place of supply. Means, in other words, chalo, I'll put it in other words, maybe that would be easier to understand. This is what I also mentioned, that this place of supply, what we are going to study, may not be the actual physical destination of your goods or service. Are you getting the point?
Yes, sir.
Okay.
Means, just keep this in mind that there is a possibility that in some cases, your place of supply, whatever we are going to study, the answer will be not the actual destination, it would be something else. And that is why, since they themselves knew that we will not be taking the actual destination always, they chose not to use the word destination. Because see, if you write destination, then you'll have to take destination only, the real destination. Are you getting my point?
Yes.
Yes, sir.
So if they would have used the word destination, then they had no choice but to take the actual destination. Hence, they purposely did not choose to use that word. So instead, they use this word place of supply. And now what is place of supply? They have the powers to take their choice, whatever they want, as the place of supply. Simple. Are you getting this?
Yes, sir.
Yes, sir. Understood.
So let us understand this with this backdrop. So what is place of supply? So there are total 4 provisions: section 10, 11, 12, 13. 10, 11 both for place of supply of goods, 12, 13 for place of supply of service. Now, if you come to section 10, why you have 2 for goods and 2 for service? One is for domestic transaction of goods, one is international transaction of goods. Domestic transaction service, international transaction service. Hence, you have 4. So, what does section 10 deals with? Section 10 deals with those scenarios where there is no import export. In other words, we are talking about the domestic transaction of goods. Now, what is this domestic transaction of goods? So where the supply involves the movement of goods, whether by the supplier or recipient. In short, first scenario is where you are moving the goods from your place to the recipient's place. What is the place of supply? The place of supply is the place where the movement terminates. So if I am sending goods from Mumbai to Varanasi, the place of supply would be Varanasi. That is the place where the movement terminates. Easy. But the second point, which is slightly different, is a bill to ship to transaction. Now, what is a bill to ship to transaction? So let us say Ajit ji has placed order on me. Okay, sir, I want these goods at my place. So I am in Mumbai, Ajit ji is in Delhi. But he says that, sir, the goods have to be delivered at Smriti's place. And let us say Smriti is in Tamil Nadu. So supplier Maharashtra, buyer who is Mr. Ajit is in Delhi, whereas Smriti, the place where the goods have to be delivered, is in Coimbatore, Tamil Nadu. Now, where such 3 persons are involved in one transaction, it is called a bill to ship to transaction, where I am billing on Mr. Ajit because he has placed order on me, but I am shipping to Smriti as per the instructions of Ajit ji. Now, in this particular case, my place of supply, interestingly, is Mr. Ajit ji's address and not the place where I have actually delivered the goods. So 1 has a different answer, 2 has a different answer. If I apply provisions of 1, the answer would be the place of where the movement ends, that is the place where the goods are delivered. But in case of 2, I am not doing that. And that is where they have purposefully not used the word destination. So in case of bill to ship to, they are saying that your place of supply is the place of the buyer who has placed order and not the place where you have to deliver the goods. Is this clear?
Yes, sir.
Yes, sir.
Yes,
So
sir.
this is where the provisions appear to be not very correct, but they are correct once you remove the specs of destination. Don't now see the physical destination. You need to understand the logic behind the provisions. Next.
So in this transaction, there are 2 legs if you look at it.
Perfect. So first leg is between me and Ajit ji. That is why the provision says I should raise invoice on Ajit ji with Ajit ji's place as the POS. So that whatever GST I am charging, Ajit ji will get ITC. And then the second leg is since Ajit ji has asked me to deliver to Smriti. So the second leg is between Mr. Ajit ji and Smriti. So where Mr. Ajit will be charging GST to Smriti, and then in that the second leg, the place of supply will be Smriti's place as per point 1. For the second leg, point 1 applies. This is understood by all.
Yes,
Yes,
sir.
sir.
Yes, sir. Clear, sir.
Super.
सर
Yeah.
जब हमने एक इनवॉइस रेज करते हैं तो उसमें बिलिंग एड्रेस भी होते हैं और
शिपिंग
शिपिंग
एड्रेस
एड्रेस
भी
भी
होता
होते हैं.
है. यस बेटा, तो मेरे इनवॉइस में 2 एड्रेस है. अजीत जी का
बिल टू और
एड्रेस बिलिंग एड्रेस और स्मृति का एड्रेस शिपिंग एड्रेस.
shipping address. So here we will take the place of supply as shipping address. Ship to
Nah,
address.
no,
No.
bill to address.
Bill to address.
That is what is the point. I will take bill to address as the place of supply. So मेरे example में Ajit ji is the bill to party. So I will be taking Ajit ji's address and not place where the goods are going, that is Smriti.
Okay, sir. Clear, sir.
Right? Understood,
Yes.
na?
Yes,
Sir,
yes, sir.
sir,
Yes,
it
sir.
means that when we supply something directly to the third party, in that case, the place of supply is the address of that person who purchased the goods and asked to supply the third party.
True. The only problem is when you read the section verbatim, they have used the word third person for the buyer. Actually, in our day layman's language, we will call this ship to address as the third party, as you rightly mentioned, right?
Yes,
So
ma'am.
that is where when you read the provision verbatim, there is slight confusion. But first point is they have used the word third person for the buyer, not for the ship to address.
Oh, okay, sir. Okay.
And the logic I already gave. If I am selling to Ajit ji, so for me, my buyer is Ajit ji, who is in Delhi. So I will charge GST with place of supply as Delhi, so that whatever GST I am charging, Ajit ji will get the credit, because this is the first leg. And then in the second leg, when Ajit ji is going to charge to Smriti, because there is a transaction between him and Smriti, in that case, Ajit ji will utilize my credit to pay the tax which he is levying on Smriti, where the place of supply in the second leg will be now Smriti. But that second leg is not covered in point 2. Point 2 is covering only the first leg. Is this clear?
Ship to, build to.
Yes, sir.
That is the point. Bill to, ship to. Correct. Right? Understood by all?
Yes, sir. Clear, sir.
Yes, sir.
Third scenario is where there is no movement. We call it as is, where is. So let us say I am buying your furnished office. So I want to make Swaminathan's office my office. So I contract with Swaminathan that I want to purchase your furnished office. When I say furnished office, what Swaminathan is going to sell me? One, he is going to give me the space. Let us say the value of that office space is 1 crore, which is outside GST because it is a construction completed building. But after that, he's also charging me for all furniture. He's also charging me for all the computer systems. He's charging me for air conditioning system. He's charging me for all the light fittings because I am taking a furnished office. Now, when he's raising invoice on me, I am buying his office on as is, where is basis. As is, where is means nothing is going to move from its place. So where the goods are, they will remain there only. So in this transaction, when Swaminathan will be raising invoice on me. First, he'll raise bill of supply for the building part, which is outside GST. So 1 crore, no GST. And then for the remaining furniture and the AC and all these things, he will raise a tax invoice with place of supply as the location of the goods. That is his office address. So in short, where no movement is involved, the place of supply is the place where the goods are at the time I am going to take the delivery. So in simple words, it will be the location of the goods. In this example, it is the Swaminathan's office address. Correct?
Yes, sir.
Yes, sir.
Now, fourth scenario covers the case where you go to a shop to buy anything. So daily we are going to different shops. We go to Kirana shop, we go to medical shop, we go to some stationery shop, and across the counter, over the counter, we buy something. Now, you are an unregistered person. Now, when a seller, let us say I'm the shopkeeper, I am selling to you something across the counter. Just 1 minute, please. Sorry. So when it is over the counter sale, like what happens in our day to day, that we go to a shop to buy the goods and we are unregistered person over there, we don't even disclose our name. And the shopkeeper is also not bothered. We are also not bothered. But now in this case, when the shopkeeper has to prepare the invoice, the question is what will be the place of supply the shopkeeper is going to put. Now, this question or this point becomes more relevant in bordering places. Like again, I'll give you example of Delhi NCR, where we have three states which are very closely connected. One is Haryana, one is Delhi, and one is UP. So this Noida place, this proper Delhi, and then you have the Haryana, where people during the day are continuously traveling in between these states. Now let us say I am a person from Haryana. I come to a shop which is in Delhi, and from there I purchase a laptop, the entire laptop system for 1.5 lakhs. Now in this case, when the Delhi shopkeeper is making the invoice, what will be his place of supply? Because I am a person from Haryana, but I am unregistered. Many times it may happen that I may not even give my name also because it is a cash sale. In such a case, how the place of supply has to be determined. So for this, a new provision section 10 bracket 1 bracket CA, small CA was introduced, and it said that whatever address is mentioned, address over here means the name of the state, whatever address that is the name of the state is mentioned on the invoice, that will be considered as place of supply. And if, like I gave example, it is a cash sale, the buyer is not disclosing anything, he just comes, he buys something and he goes away, then the place of supply is the shop itself. But where the buyer gives details, like in, that is why I gave the example of laptop, where generally we prepare bill because there is a warranty card also, and in that, along with my name, he puts my state. Now the moment he puts Haryana state in the bill, even though I may or may not give him the entire address, even if I give the state name, the provision says the place of supply will be Haryana, he will be charging IGST because the supplier is in Delhi, and the place of supply as per this provision is the address of the unregistered person, which in my example is Haryana. But where you buy small things like some biscuits, some chocolates, or some daily stationery items, and you don't even give any details, he also doesn't ask, you simply pay the money, collect your goods, and you leave. The place of supply as per the same provision is the shop itself. So the person charges C plus S.
Sorry, in this case, all the tourists will have the problem for this. And the person is traveling
All
for
the
for the tourist purpose, and the
Hmm.
person is traveling from one state to another state for the tourist purpose. If the person is
Hmm.
not able to disclose his address, then he
Hmm.
always will be the local GST and state GST. The GST
See,
will apply.
so the provision is if I'm giving my state name to you, it is always recommended. We always recommend our clients that if the person is giving a state address of outside the state, then you should always take some address proof like the PAN card or something, so that tomorrow there is no dispute. Because tomorrow, In future, your GST officer may come up and say that, boss, you have made a mistake. And that is where, because you have charged GST with other person's state, so it is better that you take some address proof of that person, which can be simply the PAN card or something, Aadhaar card, whatever details you can get from that person, right?
Yes, sir. Sometimes the foreigners also will come to
See,
India.
for foreigners, there is a different thing. Then you have a separate section, section 15 of the IGST Act, which deals with where goods are supplied to foreign tourists. They say you always charge IGST, and then the foreign tourist is given the option of collecting refund at the place of export. Sorry, at the place from where he will be leaving India. So that is altogether different set of provisions. Are you getting this point?
Yes, sir. They can claim back at the time of leaving from India.
Yes,
They can
that
collect
is
back
what is
within.
provided.
I think the timeline of the 6 months is there, I believe. Within 6
So then
months,
all the refund provisions and all will have to be followed in that case.
Yes, sir. Yes, sir.
Correct. Next, where supply is made to unregistered person and the address of such person is not recorded on the invoice, then as I said, it will be the shop's address, that is location of supply. Next, where goods are assembled. So your supply is such which requires assembly, like it may be some water purifier, it may be some air conditioning system, which requires assembly. The place of supply is the place where you will be assembling it. Next, where goods are supplied on board. Now this is interesting. So where you are traveling, and while you are traveling, while you are in the journey, in the train, in the plane, on the ship, you buy something. Now, firstly, you have to be very clear what you are buying is goods or service. Like in train, when you order some food from the train's this catering, it is always a supply of service, because food when it is served becomes a service. So you have to be very careful what it is, because this is provision dealing with supply of goods. So where you are buying some packaged article like some cake or something which is packaged, that is what is supply of goods. Now interestingly, the train started from Mumbai. The train is heading for Delhi, and on the way it is going to cross two more states, let us say. So the train's route is from Mumbai to Rajasthan, MP, Delhi. This is how the train is going to go. Now in this particular case, how will you determine the place of supply? Because again, see the same point, actual destination is impossible because the train is in motion. Hence, they have given a deeming fiction. What is the deeming fiction? The place of supply will be where these goods were boarded on the train. So the train started from Mumbai. Let us say some goods were boarded on the train in the Mumbai, that is in the Maharashtra stations. Some goods were boarded on the train when the train was in Rajasthan. Now, when these goods are sold to you, now these goods may be sold when the train is in Rajasthan or in MP or when it has just entered Delhi. So wherever these goods are sold to you, that makes no difference. The place of supply will be the place where these goods were taken on the train. So for those goods which were taken on the train in Mumbai, the place of supply is Mumbai, Maharashtra. For those goods which were taken on the train when the train was in any station in Rajasthan, the place of supply of those goods would be Rajasthan.
Sir, in such case, the IGST will not apply then.
Why not?
Because only on the boarding station, which state is the supply is done, we are considering as the place of supply. Then such cases, the IGST will not apply. No, it's not crossing to some other state.
But why not? See, how do you determine C plus S or I? You determine by two things. One is location of supplier, one is place of supply. Now, if location of supplier, the supplier is a registered supplier of Bombay, Maharashtra, then what will happen? Then both things will apply. For the goods which were loaded on the train in Mumbai, the place of supply is Mumbai, the supplier is also from Maharashtra. So the place of supply and both are in Maharashtra, so it is C plus S. But for the goods which were loaded on the train in Rajasthan, the place of supply is Rajasthan, but the supplier is still of Maharashtra. Correct, na?
Yes, sir.
I hope what I'm saying is clear. If still there is some doubt, you may please ask me.
See, my doubt is that when the goods is bordered on the particular state, that is a place of supply, and location of supply is also is the same.
Why
So,
location of supplier is same? This is what is my point. See, the supplier is a registered supplier from Mumbai, Maharashtra, correct? Now, this supplier is going to supply the goods in the whole train journey, right? Starting from Mumbai to Delhi. Possible?
yes, sir. Okay, when the supplier is supplying goods at the different state, then the IGST will apply.
No, again, no. You have to check from where has the supplier boarded the goods on the train. So whatever
Okay.
supplier boarded the goods when the train was on any station in Maharashtra, for all those goods which the supplier has taken on board in Maharashtra, the place of supply will be Maharashtra. So it will be C plus S because the supplier belongs to Mumbai, Maharashtra. Correct?
Right, sir.
But for whatever goods the supplier boarded while the train was in Rajasthan or in MP, the place of supply is those states where the goods are boarded on the train. Correct, na?
Yes, sir.
As per this provision, I hope you are understanding what I'm saying.
Yes,
If
sir.
there is something which is not clear, you ask me. So I am a supplier from Maharashtra, Mumbai. I am going to be in the train for the whole journey from Mumbai to Delhi. My vendors will be continuously roaming in the train to sell you those goods. Correct?
Yes, sir.
Now, some goods I loaded in Mumbai itself, where the train started. Some goods I loaded when the train was in Bikaner, which is in Rajasthan.
Okay.
So I loaded the train at goods at two different places. So for the goods which I loaded in Mumbai, Maharashtra, the place of supply is Maharashtra. I am from Maharashtra, so it is C plus S. But
Okay, sir.
for
For
the
the
goods which I loaded in Bikaner, the place of
okay.
supply is Bikaner, Rajasthan, but I am still the supplier from Maharashtra. Correct, na? I always remain supplier from Maharashtra, na?
Right, sir. In that case, the IGST will apply.
For those goods, correct.
For those goods, is loaded at Rajasthan.
Perfect. That is the perfect point, boss. Correct?
Also, okay, sir. Are the ticket, flight ticket, and train ticket also how it is done, sir?
But that will come later because that is service, na?
Okay.
We are still in supply of goods, right?
Right,
Then
sir.
the residuary provision says where the place of supply of goods cannot be determined as per the above provisions, it will be determined in the prescribed manner. Right now, nothing is prescribed over here because majority everything is getting covered in the first 7 cases only. Then you come to section 11, which deals with goods which are either imported into India or exported from. So for import and export, we have section 11. What does section 11 says? For import, the place of supply is the location of importer, not the location of importer. There is a difference. So it is location of importer. So let us say importer is from Bhopal, MP. The goods are being imported and getting cleared at Mumbai port. So place of importation as per customs law also is Mumbai port because they are getting cleared there. But the importer is from MP because the importer is from Bhopal. So the place of supply for these imported goods will be Bhopal, MP. That is the location of importer and not the location of import. And for export, the location of the customer who is sitting outside is your place of supply. So since my customer is outside, the place of supply will be outside India. Is this clear to all? Do you have any questions, doubts relating to the place of supply of goods, either covered under section 10, that is domestic supply, or section 11, that is import export? If there is any question, please feel free to ask.
Sir, in case of the import, the place of supply will be the location of the importer. See, in case the importer is giving direction to ship the material to some other country,
Then it will
instead
be,
of,
see, firstly, in your case, whether the goods are getting cleared in India or it is directly getting exported. Because if they are not getting cleared in India, which will happen in your case generally, because if he has to forward it to some other place, correct? He will not clear the goods in India. If you remember custom provisions, what he will do, the ship has unloaded the goods at the port. Now he will file a bill of entry for re-export. So the goods will directly be exported to another country, right?
yes, sir.
And in that case, there is no need to pay tax because you are not clearing the goods into India.
Yeah, fine, sir.
Correct? Na? Understood? Na?
Yes, sir. Okay, sir.
Your
Fine.
yes, sir is not that confident. I don't know why.
Yes, sir. Understood, sir. Clear, sir.
Perfect. Okay. I think Shubhankar sir is here. Sir, you want to take over from here?
Yes, sir.
Okay,
Sorry,
so sir, 1 second. I'll just conclude. So students, we have completed up to place of supply of goods. Next session, which will be our last session, I'll complete the place of supply of service, both cases. Yes, Shubhankar sir, over to you, sir.
yes.
Thank you.
Okay.
Sir, sorry, sir.
Yeah.
Sorry, what about the statutory updates, sir?
That will be
If
done
at
in
all.
the next class. So in next class, first 1 hour we'll complete the place of supply and then 2 hours we'll do the statutory updates. That will be done in next
Okay,
class.
fine, sir.
Yeah.
Okay, fine. Thank you.
Thank you so much, sir. Since you have already know that almost the entire GST and the entire indirect tax subject has been completed till date. In the next class, the balance chapter of the place of supply and all the amendments related to the statutory update will be covered, and it would be the most important session till now, because in examination has been observed that most of the questions tend to come from the amendment parts. I would suggest all of you to attend that session very sincerely. And if you have any query relating to the statutory updates, related to the amendments, if you have any confusion or any kind of the query, if you have, you can ask in the class. Or in case you don't able to ask in the class, then you can simply email to us, whatever the email ID has been given to you, right? So with these words, thank you so much, Vishal sir. Thank you so much to all the students for your contribution and attending the classes in a very well manner. I hope your preparations are going well and wish you all the very best for your preparation and your forthcoming exams. Thank you.
Thank you, Shubhankar sir.
Thank you, sir.
Thank you, sir.
Yes, anybody has any doubts?
So
Can
much,
please.
sir.
Thank you.
Thank you so much, sir.
Thank you, everyone. Please study hard, study strong, and let's make it through this attempt itself, right?
Yes, sir. Thank you,
Yes.
sir.
Perfect.
Thank you.
Thank you all. Thank you. Good night.
Thank you, sir. Thank you.